What's going on, everybody? It's Blake here with Trade Tracer. Welcome to the first trading week of 2021. As always, none of this is financial advice. Always trade and invest at your own risk. All right, so before we get into this, I just want to wish everybody a happy new year. We made it to 2021. 2020, as far as a trading perspective was concerned, was phenomenal. Will we repeat those same successes? I have a good feeling that we will, but we're not going to predict the market. Obviously, when we approach the market on, when the market opens on Monday, I am not going to be too eager to be just opening up in a ton of brand new positions and start pressing. That's just not our style. That's not how we're going to approach this. We are in an uptrend on the S&P and in the Nasdaq, so you should have already been long the index. One of the things that I like to do going into a new year is review my previous trading history and some of the mistakes that I made, some of my successes, what worked, what didn't work. Highly recommend that you do the same thing. However, your 2020 ended, it's done with. Okay. We're in a new year, and 2021 is when we're going to start the portfolio and our gains in our account for 2021. They're going to start when the market opens on Monday. Okay. So essentially, from a mental perspective, we should be resetting and getting ready to go again for a brand new year. All right, so whatever happened in the past, it's over with, it's done with. Let's come into 2021 with a brand new approach, with a brand new perspective, and how we're going to approach these markets. Now, that being said, like I said, we are already in an uptrend. All right, so when the market opens on Monday, I am not just going to go in guns blazing and start shooting from the hip and just pressing long. That's not how we do things. At some point, the market is going to reset itself. Like I said, the market is going to reset itself, and I'm already long Johnson and Johnson. I'm already long the index with futures. Okay, so I have my long market exposure, and I'm waiting for new setups. All right. One of the important things to assess is where we are in this trend, and like I said, we are in a 5-day uptrend now on the S&P, and I think we're in about a 13-day uptrend on the Nasdaq. So pressing here is not a very smart idea. Like I said, we're going to have some sort of reset. Once we get that reset, that's when I want to start hammering new trades. All right. So that being said, let's go ahead and get started here. We got the S&P pulled up here on a daily time frame. And since we're starting a new year, I want to go with some higher time frames to start out. So on the monthly time frame, this S&P looks extremely bullish. All right, we have the MACD making new highs. We have our cloud sloping higher. We have price closed at all-time highs. Okay, so monthly time frame, very bullish. Weekly time frame, still very bullish, right? We're above the cloud. MACD is rising, and we're still putting in new highs. Now, this we need to get back above on the on the SPY anyways. We need to get back above 378.46 for price strength confirmation. Once we get that price strength confirmation, if we get that price strength confirmation, it's going to be a very high odds that we continue to march higher. Now, the investment time horizon, the investment portfolio that we have is still very bullish, which is why I'm still leveraged long, is because this is a very bullish setup. Now, I did talk about the market resetting. Okay, so do I expect some sort of reset? Yes, I do. That doesn't mean that we come back and crash. So if we're already long, some of the levels that we're trading against, right? When I say trading against, those are going to be, where you're setting your stops, right? So this level right here, I think is, let's get rid of that. Sorry about that. This low right here, that 362.03 is a pivotal low. So if you're swing, this would be a very important level that I think the S&P needs to hold. And below that, I think this level right here is also very important for the S&P. So if you're already long, if you're swing long, these are two very key levels to trade against. And when I say trade against, that's your stops. All right. So 359.17 could be very important. If we did break below that, probably this 50 MA would be below it. So you'd be breaking below a 50-day moving average. And below that, we do have some gaps to fill below. So that's definitely something to keep an eye on. Now, I talked about us putting in these new highs without MACD at new highs, which is bearish divergence. That doesn't necessarily concern me until we start to break trend. Now, a breaking trend would be closing below the 10 simple moving average. So if we start closing below 370, that's going to be cause for concern, and I will likely go cash because we put in new highs without momentum, without MACD, and now we're closing below and breaking trend, which would probably set up for a test of these pivots. All right, so it's something to keep a very close eye on. Now, long term, I think this market goes much, much higher. Short term, we could be due for some sort of a reset. All right, now the NASDAQ, still MACD flat, still holding trend. Price is still just grinding. Like I said, this last trading week, we didn't really do much. It's going to be low volume trading. I said, your trading year should be done. Some of those trades didn't really work out too well for us. If they worked at all, it was very minimal. Take a look at some bonds here. Bonds are starting to catch some sort of a bid, but you can see they did get rejected at this 50-day moving average. Kind of sold off that second part of that candle. Now, if we can start closing below or closing above the 158.25 level, we'll call it 158.25, that's above a 50-day moving average with bullish divergence. And we could see bonds, start to catch some sort of bid and maybe make their way back up to this 161, 162 level. By no means am I predicting that, but if that does happen, that likely means that equities are experiencing some sort of a pullback. So, like I said, when you start to see, metals catching a bid, when you start to see bonds catching a bid, and your previous leaders like your Apples and your Amazons and your Facebooks start to lag, those are early indicators that the market's losing momentum. So just keep an open mind, all right? Don't go into 2021 ready to make money and just guns blazing and start pressing long. Gold is looking very good. All right, gold broke above this downtrend, and now this is a bull flag breakout above a downtrend. All right, so this is a very bullish setup. I like gold a lot, especially the close on Friday. We had the trigger on gold above this level here, which is the 176.32, it looks like. So anything above that was our trigger. And price strength confirmation was above this 177.87. That was your signal to add. So gold looks great. Gold looks very, very good. We're going to keep a close eye on miners because I do like to trade leveraged miners when gold starts to get a bid. So we're going to keep a close eye on this nugget next week and the week after. But other than gold, I actually like silver even better. You can see silver is a little bit stronger than gold is. We do have MACD continuing to move higher. We had our original entry back here. Swing long still looking great. Obviously, most of you know we are leveraged long in our investment portfolio with AGQ. Now, what sectors am I looking at to lead? Obviously the Apples of the world, right? The tech industry, right? This right now looks somewhat like a double top, but we are still holding trend, and MACD is still okay. We don't have that MACD crossover yet, but we are still holding trend. So Apple still looks okay, not a huge leader. Same thing with Amazon. Amazon still looks okay. I pointed out that this was a good area to be taking profit, that 33.45 level identified. And you can see once we hit that, kind of just sold off right after that. But once again, we're still holding trend. We still have the MACD in our favor. We really need to get back above this pivot in order for Amazon to get some more momentum. Facebook, same type of deal. This is just a chopping around. NVIDIA, same thing. Chopping around. Wedge patterns. I hate wedge patterns. So what's that telling us? It's telling us that tech is not leading right now. I don't necessarily love when tech doesn't lead because I like to trade momentum. And when tech starts to get a lot of momentum, that's when we really can have some great trades. But some of the leaders right now are in the financials. Now, this is a good thing. I do like when financials lead. I would prefer tech to lead. But when financials start to lead, it's also a very good sign to the market. So financials look fantastic, especially on the higher time frames. We might start to put some of this in the long-term investment portfolio. You can see these are the highs we put back in on 2007, right? So this is back to 2007. We never got above those levels. We came up and tested it right before the coronavirus. But it looks like we want to come back and test that level again. So I would not be surprised if the XLF comes back and tests this 3116. Now, one thing to note is the more times that resistance gets tested, the more times you poke at it, the higher the probability that we're going to break through it. All right. So if financials break above this previous 3116 level, that would be a very, very powerful breakout, because this has been since 2007 since we were back there. So, I mean, you're looking at a 14 year breakout. So that could be a very powerful move. So we could see some financials pop up in our long-term investment portfolio, and you'll probably see some names pop up on the daily trading playbook. So monthly time frame looks great. Weekly time frame looks great as well. You can see this candle. This is a bull flag. We had a 4-week bull flag right here and broke out last week, so that looks great. And obviously on the daily time frame, it looks great, guys. We don't quite have that MACD yet, but if we do get that MACD to cross, I think it's almost inevitable that we come back and test this 31 level on the XLF. So keep a very close eye on that. I do like financials into 2021. I think the banks and the financials could be one of the sectors that performs very well in 2021. Let's see. Take a look at the healthcare sector. All right, healthcare is looking pretty good as well. So this could be a name that pops up as well in our long-term investment portfolio. On the weekly time frame as well, looks very bullish. We need to get back above this candle's high, which was 114.41 on the XLV. Above that is price strength confirmation. You guys know when we have price strength confirmation, odds are in our favor. So keep a very close eye on that. Now, some of the names that I will have on the playbook, I'm going to give you one because this is going to be a public video for everybody. Expedia. All right, Expedia looks really good to me. This is gap tire. Didn't really do much, just kind of chopped around. And now we're breaking above that previous gap high with a MACD bullish crossover. So I really like Expedia heading into the open on Monday. So just to wrap up, guys, S&P still looks bullish. Do not come into 2021 just looking to press long. Wait for the market to set back up. In my opinion, longer term, the market looks like it wants to go higher. So that being said, stay long versus your stops and wait for the market to set back up to add new long market exposure. That's all I got for you guys today. I'll see you on the open.